and Biz Talk Today TV. Welcome everyone to the Money Path. I am your host, Todd Schoenberger. Joining me today is Aquiles Larrea. He is the CEO and founder of Larrea Wealth Management. Achilles, welcome to the program. So going into this show today, we have a significant sell-off in the NASDAQ. We have the NASDAQ down over 1%. Tech shares, the Mag 7 shares are just getting hit hard, including those software stocks. Do you think that this is just a wonderful opportunity to get into those tech stocks, or do you think we'll see more selling in the near future?
We could see a little bit more. I think this is a bit of a shakeout of sorts, so you can't be afraid of this downtrend. We really had a huge run up in the recent, if you look at the recent history of all these stocks, we've had double digit increases in most of the FANG stocks, if not all of them. So you want to be cognizant of that. But at the same time, you want to say, hey, if there's an opportunity for me to go and buy premium, high quality stocks for my portfolio, you'd be a fool not to do it.
Okay, I get that. So on the AMD shares, though, you're down almost 14% right now. You had Microsoft down over 10% last week. It seems that the AI trade is still there, but you have companies that aren't considered AI companies taking a significant hit. What's up with that? Because you still have these software companies, you're still going to need them going forward. I mean, and they're still reporting decent numbers, but is it just a guidance issue at this point, or are just not the right investors in those stocks at this time?
Todd, what I think you're seeing here is a lot of uncertainty in high quality names. But I want you to also think of something. The cash position that both those companies you mentioned are huge. And if they need to go and invest more money, they're going to do it. And even if they don't, if they pull back a little bit, but you're right, the guidance could be an issue. I think it's more right now, is AI going to pay off for these companies in the future? And the answer is short term, we do not know for certain. But long term, this is the future, Todd. We're not looking at fly by night companies. Look at Microsoft, how many billions of dollars they've invested so far. You don't do that on a bet. You don't do that on a win. So, I look as right now the weakness in this entire sector as a buying opportunity. Maybe you don't, as we say in the business, we don't back up the truck, but maybe we can accumulate, slowly and silently and strategically. You start accumulating some of these stocks. I wouldn't be afraid to go in these stocks. When can you get a fire sale and pick up some high quality? That's the time you're going to make money long term.
Okay, well, yeah, don't back up the Brinks truck is what you're saying, but take advantage of the opportunity. So I understand that. Let's turn the page on some of the more bellwether companies. I mean, companies like a Boeing, a Caterpillar, even ExxonMobil has been on a tear this year. It's up just under 145 once we went to the show. So what do you think? Is that a nice area that investors may be able to increase their core holdings with?
Yeah, it's funny. All those companies that you mentioned are high quality companies, decent dividends, and if we see a flight to quality, let's just say people are leaving AI and going somewhere else. These might be the areas that you want to go into because there is especially companies like Caterpillar, Boeing. There is significant growth year over year that we're seeing in both these areas. Caterpillar is still thinking it's like a growth stock, like it's a tech stock. That's all these double-digit increases it's been doing all along, but worthy of investing because it is high quality. We are talking about infrastructure plays. Boeing, another company. There's anything that has been bad has happened to Boeing. It's been hit over the head so many times, yet it's come out smelling like a rose right now. So that's another reason you want to get into that. People can disagree with me. Every time there is an airplane crash, the stock
Oh,
gets hammered, and we go in and we buy more. And not to, make light of an event, but really because we believe fundamentally there is nothing wrong with the company. Same thing with Caterpillar. All the infrastructure plays that are playing out in the United States have been funded. They're going to be using their equipment. So you want to be owning high quality companies like that. So that's just a couple of examples of where you could make significant double digit increases if you play your cards right.
okay, that's some solid advice there. Give the audience an idea on sector rotation at this point. It seems that we have this has been a topic that was kind of shelved going into 2026. What do you think at this point, though? We're midway into the first quarter.
I would say don't back up the truck, but I would most certainly be looking at different areas. You want to look at cyclicals. You want to look at companies that are not participating in the upside for the last year, but they're still good companies. And I'll give you for instance, perfect example. They're getting kind of hammered right now, but Raytheon is an excellent example of a company that has just been slow and steady moving to the upside. But you're not going to make 15, 17% on it, or you could, but you're going to make a decent, let's say you make 7% and the dividends 2+%. 9% is nothing to sneeze at. That's just one example. Look at the financial companies. We like companies like SoFi out there. We think they're innovators in the financial tech industry and it was around $20 last year. We are looking at it to be anywhere between $28 to $30 moving forward. So that's another company that in the short term, 12 to 18 months, Todd, could play out reasonably well, and you make some decent money there. These are just thinking about it is not going to make you money, but taking action, being strategic, getting in there on a short term to long term basis isn't going to hurt you. Time is on your side, my friend.
Okay, I like that a lot. What are your thoughts, though, on the metals trade? I mean, Friday we had a significant sell off. I mean, a giant sell off. Yesterday, a rebound. Now, today, we're selling off again. It seems very volatile. Almost these violent moves in that sector are really causing concern and really, I think, eliminating the retail investor. But what are your thoughts here? Is this a good time to be in metals, or should you just stay away?
You know, if it's a complement to your portfolio, cool. I would not go more than 3 or 4% at this particular point. You will make money. I mean, just look at, gosh, if you look at gold in a very short period of time, quadrupling, going up that much. Silver going up for the first time in its history, the amount that it has. But guess what? It hasn't had a correction. So, what we're seeing here, if you're looking at an efficient market, you have to say to yourself, is this an overreaction? Which I think it is currently. But once it comes back down, I want to get in and buy a little bit more, but not much. So once again, be strategic, maybe accumulate 2% more, a little bit more than that, but don't bet the farm on this. You will be rewarded. Look for the when you're looking at gold and you're looking at silver, look for companies also around it that will benefit from those gold and silver prices going up. And you'll do well there as well. Not too dissimilar from the AI, where the AI is not the story, it's the infrastructure. That's the story, the growth story there, Todd. So, same thing with gold, let it pull back, let it move back a little bit, but don't be afraid to get back in there.
Okay. Well, let me we'll close out the show with this question. Here we are. It's mid-February, early February, I should say, and the weather sucks. I mean, quite frankly, it does. The country is just getting slammed with snow, ice, cold. It's awful. And now people want to take a vacation. They want to get the hell out of town for obvious reasons. Are there any travel and leisure stocks that are on your radar at this point?
I would say the only area that we're going into, we like hospitality. I have been an investor of Hilton for over 30 years. And the reason why we like the Hilton name is the licensing. They're easy to work with. We've heard from the licensees. And the stock has a predictable move to the upside. On other shows, I've talked about this many times. We think that there is huge growth in the Hilton name that has yet to be explored, as a matter of fact. Now, don't get me wrong, the sector as a whole could benefit from, as you say, terrible weather and let's get out of Dodge. But you also have to take into account that most people can't just drop things on a whim and plan their vacation like that. Vacations are planned out in advance a lot of times. Who's going to benefit? We think hospitality is going to benefit. We think that if you're looking for a sector that really, we would say stick to the financial area right now if you're looking for more growth, because that sector has been really beat up at this point. So it's unrelated, but we like Hilton. We think that there's a lot of opportunity there. You could make double digit this year on it. So we're still in February, lots of opportunity, lots of way to be strategically growing at this point and have your portfolio really kick butt for 2026.
I like that's a great way to end the show. I love the optimism. Some great picks is there as well. There, Achilles, you did great with some choices. I know that the audience enjoys it as well. Achilles, thank you again for joining me today. I can't wait to have you back. We got to get you back on the schedule on a more regular basis because I know the
My
audience loves
pleasure.
hearing
My
from you.
pleasure.
Outstanding. So, on behalf of Aquiles Larrea, I am Todd Schoenberger. Thank you once again for joining us on the Money Path. Coming up later this afternoon at 3 o'clock Eastern live, we have Jay Hatfield from Infrastructure. And boy, does he have a lot to say about the Kevin Warsh pick with the Fed. You will want to tune in for that. So, until then, take care. All right, Achilles.
That